Hello everyone, welcome back. This episode here, I'm actually going to do a chart analysis. So there you go. I guess some of you have been waiting for a chart analysis. Anyways, I want to go to an article here real quick, and it talks about why the Bitcoin price is going down. So great article. Again, it's Crypto Coins News, and the author is right there. There's the date and why the Bitcoin price is going down, and the author gives some reasons why. There you go. And possible reasons. Talks about a few stuff, um, and offers some graphs. Go ahead and read the whole article, and I guess leave a comment or whatever, or just not read it. Or anyways, I want to talk about maybe some things that a lot of people haven't considered. Like, a lot of people want to know why the price is going down. Are people selling their bitcoins? Are they using it? Are they hoarding it and all that? And there's you have to realize that these exchanges don't are not 100% representative of Bitcoin's value. Okay. Remember in my previous episode I mentioned that a typical exchange, as everyone knows it through the financial system, New York Stock Exchange, NASDAQ, the Amex, all those other exchanges, whatever, Chicago Board of Exchange, you name it. Okay, there's like a billion, well, not a billion, but there's a lot of exchanges. And what I've noticed from dealing or working with commodities or products or things, whether it be wheat, cattle, metal, or whatever, any resource, there seems to be a disconnect between this and then the real world. Okay, this is a virtual exchange here. In my opinion, all exchanges are virtual in nature. All right, when someone buys $1 million worth of contract for coffee beans, I'm going to tell you right now, they're not going to get coffee beans when that contract expires, or when they strike on that contract, all right, or whatever, how it works. They don't get anything, all right. What they get is the difference in the price from what they started, or what they get out of it, or whatever, or they lose money. So this is all virtual, all right. And now there is a disconnect between the virtual exchange and the physical exchange. So it's hard to think about it because we're talking about a virtual currency, right? Something that basically doesn't exist. And how does that relate to, a virtual exchange and then the real world exchange, right? The physical world exchange. Well, how do you do that with something that doesn't exist? Well, it's a little tricky, but if you've seen my previous episodes, you would kind of have a better grasp of that idea. And also, it's strange. The best thing you can do is try it for yourself. Try trading bitcoins for yourself, and realize that although bitcoins don't exist at all, people will pay for them. Kind of weird to say that. Bitcoins don't exist, and in some ways, if you really look at it from a third-person perspective, basically someone just paid for nothing. That's what it looks like, anyway. And in some sense, you did. You paid for nothing. But if you know what I know, and if you knew what bitcoins were, you know you'd you actually got something more valuable than money. So, anyways, I want to talk about momentum trading or momentum investing, trading on momentum. And I guess there's a lot of ways you could talk about momentum trading, but in this particular episode, I'm going to talk about why would a price just go up and then just go down, and then just go up again, and then just go down. Like, why does it do that? Well, because the way these exchanges work is they do only three things. All right. The price either goes up, the price either goes down, or the price just goes sideways. So the price goes up, price goes down, price goes sideways, price goes up, price goes down, price goes sideways, and then it goes down. So it only does three things: up, down, and sideways. So why would a price go up? Well, obviously people are buying, and that drives the price up. But why? Why would a price go up? Well, there's no other reason than the fact that you believe the price will be going up, and that's why you buy Bitcoins. And then when the price goes down, you believe that the value is going down, and that's why you're trying to sell your Bitcoins. So there doesn't really have to be any particular reason whatsoever. Another thing is that there may be people selling and there may be people buying, but why they would do that on an exchange? Hedging reasons, insurance reasons, exchanging reasons, but not, I wouldn't say to a level that drives the price up and drives the price down. So, I think there's something more involved as far as exchange price. Now you got to remember that exchange price only exists only through these exchanges. And if you see my previous episodes, you realize that these exchange prices are nothing more than just reference for a price. And you can dictate your own price, lower or higher or whatever. It depends on your situation. If you really want to cash out and you can't wait that 1 or 2, 3 days or a week or whatever, and then pay for the rates to wire and all that, it could be beneficial for you to sell just at a lower price, at a discount, to just get the your money back, or you're trying to realize your money in a quick way. Another reason may be, again, the demand for Bitcoins aren't necessarily related to price. Alright, it's not, demand for Bitcoin is not really related to price, because there's a lot of things that can happen here. It's used as a payment method as well. So not only is it an asset, but it's a transferable asset and a convertible asset, and an actual asset, right? So it does a lot of things. It's like legal tender. It's like money. It's like a check. It's like a credit card. It's like an insurance. And the weird part is, it's like all those financial instruments that you could possibly ever think of, but at the same time, it's none of those as well. So that's what really blows me away about Bitcoins in particular. But I'm going to talk about, I'm getting a little bit off subject, but let's go talk about momentum trading, because why a price goes down and up could be for several reasons. Now, when I look at a chart, I really enjoy having two things, two average lines, one being a shorter period and the other being a longer period. Now typically there are usually 10 and 25, and this is a simple average, so it's not a weighted average or anything. But you can get an idea by looking at this. You can see that there's a momentum pushing this price up. So if you look at this, and this is on a 12-hour, this is Bitfin. If you look at this, you'll see that the momentum of the trade is pushing this price up. So every time it hits the shorter period time frame average, you're seeing a push up on the price. And then vice versa, you'll see the same as well as it crosses over and it's now riding on the downtrend of this price, the momentum of going down. As you can see, it's hitting this line before it breaks through, and now it's going sideways, temporarily going sideways, breaking down, breaking back up. But this time you can see the band of the lines, they're getting really close to crossing over, and now you're seeing that it's riding the uptrend, the momentum going up. So usually there's really no reason other than people think that it's just going to go down, so they're selling off. So recent here is what you're seeing is you're seeing a momentum downward, and so every time it hits this 10 period average, that you'll see that as it rises up, it only goes down, and rises up and it goes down. So this is a downward momentum versus an upward momentum. And sometimes, you know, it correlates with lines, it correlates with waves, it correlates with I'll say Fibonacci lines. I don't really use them, but there's some correlation there. If I was going to do anything like like multiple lines, I would just draw the lines. I wouldn't use a Fibonacci line, either this one or this one. You know, I just draw the lines. Either just draw the lines, you know, horizontal or whatever the angle of the momentum of the trade is. So why is the price going down? Other than, in my personal opinion, it's you know, when it comes to exchanges, it's basically people selling their bitcoins. I mean, that's kind of the simplest answer I can give. But why is it going down? I mean, there's no news, there's no nothing. If anything, there's maybe a little bit more positive news. Now, when I see this, I don't know if any effect it had as far as the New York regulations, because that came out during this time frame, right around this time frame, and only did after it came out a couple days that it started to go down. But I think it was a part of just a whole chart analysis here. Just people saw that it couldn't cross over, and people just started selling off. And you're going to see that. You're going to see a sell-off here, and it's going to be a momentum carried through, and at some point it may be oversold. And when people oversell, that's actually the best time to buy, because you're going to get the best deals, because you know, people who oversell, they typically oversell and then they overbuy. You know, they tend to be, you know, late or unable to see, you know, the trends moving, and that's what's kind of what's happening. And so if there's any reason for this to go down, it's just other than the fact that people just think the price is going down, and you know, they're seeing the average and they're seeing the momentum of this trade moving downwards, and they're just reacting to it. And it's kind of weird that you know, the price of an exchange is based on nothing other than what people think the price will be in the future. But that's what markets are. That's what they're for. That's what these exchanges are for. They're just a collective, let me see, a collective consensus of what the general people who trade think the price is going to be. Sorry for that. if this is too obvious, then I'm sorry, but at the same time, a lot of people want to know why. Why is the price going down? I don't know. I don't understand. Well, it's nothing more than general consensus of what people think the price is going to be. That's all it is. Um, you can have a news breakout like, I don't know, like the U.S. government declares Bitcoin as legal tender. That might raise the price, but you know, um, what's really going to make the difference is the momentum of that trade. The news may affect it, may not affect it, but in reality, it's just what people think the value of the price is going to be in the future. So it's just a consensus. So right now, you see the sell-off here, and if you want to know what I think, here's what I think. Typically what you'll see is you'll see a very big sell-off here. Now this is different. It seems to be a very steady sell-off here. So I would watch, for example, just like how this price started going up, you'll see how it reacts when it hits that 10 period average. It's reacting to it right now. You can see that little candlestick pull back a little bit. It wouldn't surprise me because I've seen it before, like here, I've seen it here, and I've seen it here recently. This the last one right here, this little skinny one, where the price went up, hit the line, and then a 12-hour period, not only did it go up, it came back down and went down further. Then the next 12-hour period, you see that it went down here just to stop. Now it's going back up, it hits the 10 period average here, this line, and now you see it's stalling right here. So after a while, the momentum will carry it down. You may notice a shift in a momentum when you're able to see, for example, like this downtrend here, you'll see it break above this 10 period average and try to stay above it, and then it may go down and up, but as long as it stays up, and then this is a great example here, you'll see it hit up and hit the 25 period average, and you'll see it react to that, which is an indication for me that is a possible chance to break up. And what it did, it broke down one more time to break through. To get this closer, the bands have to be really closer. That's going to give you the indication that there might be a change or a momentum going back up. And so it did. It went above both lines and stayed above both lines, and then right here really exploded. So as soon as this started coming through, it exploded up, and it couldn't quite sustain that level, and then it would hit down, and then you see it kind of bounce off of this average here and then go below, and then once it hits below, that should be your indication that there might be a downward momentum coming soon. So it'll go up and down, and this is where it goes sideways, but once it starts falling below these two lines, the 10 period and the 25 period, that's just a psychological reaction. And you just have to get used to that. Experienced traders know about this very well. Anybody new or inexperienced traders maybe have a difficult time in seeing those trends or those momentum changes. So that's just my input on why is the price going down. Well, the price is going down because obviously people think that the price is going down. That's why they're selling. And also they're reacting to these average lines, and they're seeing a pattern here, which if you look at it, and you got to pull back. You can't just do, I'll give you an example. You just can't do like here's a 1 hour, and if you look at this 1 hour, you're like, oh my gosh, like this thing's just, it's different. It's too short of a time period to really get an idea. When you think it's just going to break out of this thing, it just ends up going down, and you think it's going to break out, it just goes down. Unless you're already experienced in this, you can actually see a very short time frame in which you can basically short a position, short a position, if you know that momentum's going down. So you can just literally just wait for it to drop really hard, and as it wiggles away sideways, you can just buy in position right here and allow it to go back up. And then if you know that this is a downward momentum, you can start selling right away when you get up to here, or when it hits up against these lines on the averages. So, that's what I think some traders are doing. Some people, exchanges are meant for, trading. They're not. Sometimes they're not really reflective of what's really happening in the real world. Although they do have an influence, because a lot of people may view the prices and make a reference on the price. So, for example, this Bitfin price, I'll use that to transact in the real world. But I'm not going to use that price. I'm going to use the price that I want to use, but it's going to be based on one of these prices, because like I said, these exchanges are nothing more than a general consensus of what the value of Bitcoin is at that time. It doesn't mean it is the value. It's just a consensus of what people perceive the value of that Bitcoin at that time. So this is something that I guess you're all just going to have to get used to and have a better understanding. So anyways, so I guess if you all want a chart analysis, I'll go ahead and I'll give you one. I mean, it's obviously trending down, and what I've seen basically, and I'll give you an example, is as it trends down, that you'll see the shift in the momentum as soon as it breaks above this shorter average line, the 10-period average line. So if you could break above it, and usually the other challenge is once it breaks above it, it'll just hit right up here on the 25-period average and then come back down. But at least these two averages will start getting close together, like as you see here. It'll start getting closer and closer, and you'll start seeing it, start seeing it turn. And once it starts turning, it could be a buying signal or a selling signal. Like right here would be a selling signal. As you see this never reach up, and the price never goes above this, that it starts going down, this is a selling signal. So if you're looking for buying and selling signals, this is a good way to do it. And again, it's just another tool in which you can incorporate into your trading strategy, using lines, momentum trading. What else is there? Breakouts, break up or break down, waves. And then using just two simple average lines. You'd be surprised how many people just look at these two lines and trade based on whatever signals they receive, or what they see, whatever signals they see, either buying or selling. So there's no rhyme or reason why this price moves up and down, other than what other people think that the price is going to be. That's it. I don't care how many Dells there are. I don't care how many Bitcoin Dell sells, or how many people buy from Coinbase, or etc., etc. At the end of the day, they're not trading on the exchange, and those Bitcoins aren't necessarily going to an exchange per se. You gotta think about, there's two worlds. There's a virtual world, and then there's the physical world, and those are two different worlds. And if you're trying to merge them, and I can understand, because I have to admit, after a while, for me it was very difficult to distinguish between my virtual reality and the real world, because they seem to mimic each other. They seem to be actually doing the same thing. So you just have to be careful with that, because there is a dark side to virtual reality. So anyways, I hope this helps, and you get a better understanding of what's going on. Why is it going down? Well, people just think it's going to go down, so they start selling. And you'll start seeing the signals here. As soon as, like I said, if this breaks up, and I like to see if this continues to go up. If this breaks up and out of here and hits this line before going back down, it's a signal. You're still taking a risk because there's no guarantee, because it could hit this line and just plunge right on down. You won't. There's no telling what's going to happen. You just have to prepare yourself. So a lot of things I mentioned was average cost buying or average cost selling as you work your way, as the price moves down or the price moves up. That's another way. That's another thing I do to limit my risk. So you'll come up with your own strategy over time. You just have to have the experience of actually trading it. And then you also have to get a better experience in trading in real life, like actually buying Bitcoins from someone and selling Bitcoins to someone, or buying things with your Bitcoin and selling things with your Bitcoin. It's just you just have to get a better idea. And once you start doing this in real life instead of through these exchanges, I do trade because it allows a lot of liquidity, a lot of price action, and I have to admit I've made my share of mistakes, and my biggest mistake was trying to trade on a closed, exchange, on a closed exchange service or on closed exchanges. Like I said, you can take your Bitcoin and put it in Bitstamp, and if Bitstamp is high, you can trade there, or you can move it to Bitsy, you can move it to Bitfin, you can move it to whatever this is. I don't even know how to say it. You can move it to Litecoin. There's a lot of things you can do. So it's not a closed exchange. The way I think about exchanges is like, whatever you buy at the exchange, can you take that with you? So like if I bought, I don't know, I'll just throw a name out there, like okay, how about this? If you all bought like JP Morgan Chase stock, right? You don't get an actual certificate stock from JP Morgan Chase, because whatever stocks I've ever bought, I've never received. And it's not like I can take it to the company and say, hey, can I have money for your stock? I'd like to trade it in for money now. It's not like I can go to the local Chase branch and first of all, I don't even get their stock. And even if I did, could Chase like cash me out? Like if I went into the bank at Chase and gave him like 100,000 stocks of Chase stock, would they cash me out? No, they wouldn't. I have to go through a brokerage or through a particular exchange. I have to go through some point to convert whatever I bought back into money. Well, Bitcoin's different. If you don't like that exchange, or you don't like the way they wire you money or how they convert it, you can just pull your Bitcoins right out and just go ahead and sell it to someone else. You can buy groceries, you can buy a car, you can buy a house. There's people who are willing to accept Bitcoins for those kind of things. You can buy whatever gift certificate, you can sell it for legal tender and then go buy whatever the hell you want, because legal tender people have to take it whether they want to take it or not. So hopefully this gives you an idea of how you can trade. It's going to be hard for, I think, people who are getting into Bitcoin to understand this, because they're so used to the old world, the old age, in which I guess a lot of people are still in. They're still stuck in there, and I have to say that it's gonna be I guess a little bit of my duty, and also anybody out there who's trading bitcoins, to help those people, to liberate them from that, you know, from that system, from the old world order system. They're I don't know how to say it, but I guess the best way to say it is that they are they're trapped, or they're imprisoned against their will. They just don't know it, by the old world prisoners, by the old world order that wishes to imprison, enslave everyone, and take them down with them. As we shed the old skin and become reborn into a new world. So, I would encourage everyone to help others free themselves. Absolute free will. So, anyways, I hope this helped out. Feel free to comment, like, dislike, or even do a video response. Until next time, stay tuned. Bye.